Thanks, Carrie. Hello, everyone. And it's so nice to see some of you I've exchanged emails with. So it's so nice to see you are joining us today. And we have our speaker today, our lovely Carla. I'm going to introduce her in a few minutes, but just to go through some house matters. So just a background about myself. Carrie, thanks for introducing earlier. I've been in the technology industry in general for my entire career, and it's been in the technical and business side, basically from ideation, business strategy, product definition, but basically what it takes to create a new business revenue pipelines. I've been a volunteer and TIE charter member for several years now, and now this year I'm also on the board. And this is my second year as TIE Women Program Lead, and I am so excited. Like it just rejuvenates me to see so many women entrepreneurs in our community here. Carrie, if you go to the next slide, I just wanted to introduce a few of our program sponsors over the years. We wouldn't be here without them. Then a little background on TIE itself. If you look at TIE, it's the basically world's largest network of entrepreneurs. The mission is to foster entrepreneurship globally. And if you look at a chunk which is related to female entrepreneurs, if you look at female-led startups or where we have co-founded, we see a very small percentage of flow of global venture capital, and very disproportionate. In a certain magazine or some reports I was looking at, it said the women-led startups received just 2.3% of venture capital funding in 2020. You will see the reason TIE, it became important that we have programs specifically for women in our TIE community. And so TIE Women Program was created 4 years back, Carrie, if I'm not mistaken, was created to empower women entrepreneurs. And the way to do that is through learning, mentoring, investor access, global networking, and giving a global platform to showcase. But doing so, everything in a very safe environment. And safe and very informal environment. So you can meet other women entrepreneurs, other charter members, investors, and be heard. Basically, give you that podium to be heard. So in that spirit of learning, we have created a spread of these we are hoping it will be very informative, targeted workshops. And today we have our lovely Carla with us, who's going to talk in a little bit. But then on July 19th, we have digital marketing and PR with Ivo. And then previously it was on August 2nd that Diane was, we have just yesterday updated the date to August 16th, and I'll send a note out, but the registration process is the same site. Now, these workshops are very targeted to certain topics, which we had learned women entrepreneurs were asking us time and again, questions on, as they are, you're traversing your entrepreneurship journey. So please make full use of these workshops. And again, it's informal, very safe. Feel free to ask questions and be collaborative in that way. Another item I want to say, we have a local, for the state pitch, TIE Women State Pitch competition. We have received about 30 applications so far. So we will be announcing the finalists on July 22nd. And so expect some email from us. And then the TIE Women Pitch competition for Oregon itself is on August 8th. At 4 p.m. Carrie, if we go to the next, we wanted to show you from our lovely state, we have had 3 past winners where when Oregon started to, work in this Thai Women program. And their background varies. So we have Yomasart, Lazarus, and Reco as our past winners who had the opportunity to go into the global finals. And next slide. So for this year, the global pitch competition, once the winners are selected, the one winner will go to this global pitch competition, which is in Singapore this year, with again a global networking opportunity and investor access, just a global platform itself. And so that one is November 15th to 17th. Now, as all of you are waiting, without further ado, I would like to introduce our lovely Carla Titus. She is founder and CEO of Wealth and Worth Within. She's also a finance expert with 15 years of corporate financial planning, analysis, strategy, online business, CFO consulting experience. And she has been a Thai Oregon finance resident expert. Carla, welcome. We are so lucky to have you here. Share your wisdom and experience today. Please.
Thanks for having me. Hi, everyone. I'm Carla Titus. Thank you for that lovely introduction, Nidhi. And I'm excited to talk to you about everything numbers. As you all know, that only 2% of women-owned businesses actually break $1 million in revenue ever, though we are much better at business than men sometimes. Building more profitable businesses and long-lasting businesses. So the numbers are the key to success when it comes to your business. And I think is rarely the thing that we want to focus on or talk about or do much with. It's the first thing that will get you out of business as well. So I'm here to share some knowledge around, what is important to track and know about numbers in your business, and then get into a little bit more about forecasting, which I think is where the proactive planning really comes into play. So I would love to get started with just some quick intros. I want to know what businesses are in the room, maybe a question you have top of mind about your numbers or finances in general that I can jot down and address as we go through the presentation. So I don't know what the best way to do this, Nidhi, but we can just go around and I'll make sure to take some notes. If you want to call on people or volunteer, raise your hand.
Oh,
the reactions.
Yeah, let's start if anybody wants to start, and then take that first jump.
Who's the first brave one? We're friendly, I promise. I just want to know more about you.
I can start.
Go ahead, Blair.
So the name of my company is For Her. It is a luxurious feminine care kit company for the everyday woman who wants to feel special during her special time of the month. And the challenge that I have financially is that this is a pre-seed company. And so I love that you just mentioned projections. It's hard to estimate those projections if I haven't made any revenue just yet.
Yeah, with no data, right? So that makes it a little harder. So we'll talk about that. Thank you for sharing. Appreciate it.
No problem.
I'm Parisa Saki. I'm in a similar boat as Blair. So I have kind of the same question. My company is Havant. It's the first high heel of its kind to combine a fashionable soft knit with bio-based foam. So it really allows... Sorry.
Folks, if you're not talking, could you please mute yourself? Just
go ahead.
Yeah, so it allows for all day breathable comfort. It's kind of, Oh, nope. You're still talking.
We're back on. Okay, keep going.
I like to think of like Steve Madden meets Nike, right? So we're still in the prototyping phase. I'm working with a factory out in Vietnam, but we haven't made any revenue yet. So I'm kind of, how do I, position my company in a way to start getting some of that pre-seed funding when I don't really know, how to do those projections yet.
Perfect. Yeah, we'll talk about that. Thank you.
I can go. So my name is Kim Hutchison, and I am here in Portland, I have a company called Somnoseal. So I'm a physician in the neurology and sleep medicine space, and I created a new device to eliminate mouth leaks to try to help patients be more successful with their CPAPs to treat their sleep apnea. But the device is actually now it's more of a consumer product to promote nose breathing. And so there's been sort of new markets opening up in like dentistry and sort of airway management. And this year I launched the product at the beginning of this year. And so I'm basically a solopreneur. I've had a little bit of funding, and now I just passed 10,000 in revenue, which has been really exciting. But as a solopreneur, I'm totally like, I have a QuickBooks account, but like my books are a total mess. I use a lot of my own money, and I'm getting ready to sort of work with distributors, and if that's going to cut into my, my profits, but yet with the numbers so there's some like forecasting and projections that I need to try to understand better. But I also need to just understand like, what is the minimum bookkeeping that I need to be doing, and how, I would love to have someone else do that, but I can't really afford it. I have very little money for the company. So I'm just kind of maybe in just like the next stage. I'm not necessarily trying right now to get I'm not looking at like big investor funding at this point.
Okay.
So I'm just looking to try to make it to the next step.
Continuing to self-fund.
Yes.
Through
I mean,
revenue
I
and
think,
growth.
right, through revenue and growth. And if, there may be through that an opportunity, but the times that I've tried to get some investor like VC funding, they don't seem to be interested in a consumer product. And it's also like, you kind of need like a whole team and people like ready to deploy everything. And I'm just trying to keep my head above water. And it took a lot of effort and energy to try to even apply for the VC funding. And I just don't have the time to try to do that all the time and then not get it. I mean, that's just the reality of the situation.
Okay. We'll touch on that because I think it's a reality for a lot of people starting. So
it's like,
not
what
alone.
do you do when you don't get funding? You do what I'm
Yes,
doing. And so
exactly.
you need to know keep track.
Thank you, Kim. Appreciate that. Good insights there. Okay, who else? Go ahead, Kurt.
I'm Kurt Newcomer. My company is What's in Store. I just finished the Thai boot camp with Carrie, this last cohort, and I'm on to the next phase of that, which is getting a lot of bids and organizing my next steps to get my business functioning, so I can start beta testing it because it's a software as a service platform. So basically, I'm just setting up my spreadsheets and absorbing everything I can at this point, and that's where I'm at. Thank you for the time today.
Okay. Yeah, thank you. Okay, I still have a few people. Don't be shy.
Hi,
You want to address your issues? Go ahead.
hi, my name is Dominique, and I am the owner of Solid Foundation Childcare. It's an in-home business, and I've been having a hard time separating the finances because it is in my home, just wrapping my mind around that separation. And I would like to come up with a 3-year projection for my business. So that's why I'm just here to gain tips and knowledge on that. I'm still in the startup phase. So that's where I'm at right now. Thanks for having me.
Great. Thanks, Dominic. I pay for childcare. I'm very aware of the model. Paula, go ahead.
Hi, yeah, my name is Paola. We are 360 Sierra. We manufacture ultralight camping trailers to go camping with comfort and style. The product was designed with women in mind because it's easy to tow, it's ultralight, it's compact, and has everything you need to go camping. So we just received funding, we have revenue, and we are in that point that we don't know how to be prepared. We need to buy inventory, but we don't know how many things we need to buy, that kind of thing.
Okay, good. Sounds fun.
Hi, I'm Julie Brown with the Oregon Startup Center, and I've known Carrie for a long time. We are located in Beaverton, and we're a business incubator that actually funds 5 companies a year. But a lot of questions we do get are around the finances, and most of the companies we're investing in are pre-revenue. So we've had some workshops on finances, but this is just additional information. And then each August we start a Beaverton Startup Challenge, and I can get Carrie the information on that. But I'd love to see more women applying for the program. And again, it's we have angel investors who evaluate the applications, but the finance part is really critical, and it's just getting in different perspectives and how to hone that message through to the women entrepreneurs. So thanks for having me.
Of course. Thanks, Julie, for being here. Okay. We have a few more, but if you guys are not ready, that's fine. We can just come back when you all can join to tell us more about your business. Okay, so let me share. I'm going to keep this in mind as we go through, because those are really good questions. And I actually feel like I did a really good job putting that in my presentation already. So I think I came really prepared for this group because I knew you guys were going to ask those questions. So, but at any point in time, if you have a question, just unmute or go ahead and type it in the chat and press it. And then hopefully this doesn't break everything. Give me a minute here. There we go. So the goal for today, more than just going through the presentation, for me is really key that I address what's top of mind for you when it comes to finances, because we can teach you all the theory, but if you can't implement it, then it falls flat. So for me is, let's make these concepts really something that you can apply in your business right away. And it's not all about me talking at you or to you, but really having a conversation on what's happening with a business. The consulting experience I have tells me these are a lot of the topics that are consistently the questions we get asked for this startup stage or pre-revenue, pre-seed, and then in some cases, for some of you who are already generating revenue. So I'm just going to go through a few slides here to just kind of level us off, and then I'm going to start addressing some of the questions as we go through as well, but feel free to interrupt me, raise your hand, and then we can get to that. First, I always like to tell people why they should listen to me. They find that there's a lot of people out there that maybe don't have the experience or expertise to be teaching this topic, but I actually do. So I've been consulting for small businesses, everything from pre-seed to funding to well-established businesses for the last 5 years in my consulting business. I myself, I'm growing my own business as well, bootstrapping, so I'm happy to share some of my experience as well. And have helped, business land grant loans, VC funding in the past by presenting to investors. So a big background there to pick from, as well as corporate finance experience, everything from analysts all the way to senior managers. So I just share that because we do know a thing or two about finances, and I want to make sure that you know who's here in front of you teaching you today about it. So okay, so I'm going to start with a foundation piece, just kind of high level. I got a question asked around bookkeeping, what to track, how do we do it? Like, what should I be doing there if I can't afford to outsource it yet? So we want you to be doing monthly bookkeeping because it's hard to catch up if you leave it behind. So if you are not already doing this, it could be pen and paper. It can be on a spreadsheet. It doesn't have to be anything fancy. I just want you to do it. Check what transactions, what has happened in your business, and how much money you're either spending before you're making any, or if you're making some, what's left after that. So it will be a compliance requirement at tax time. So I don't want you to wait till tax time to scramble and try to get all your bookkeeping done for the year, because it's just painful and unnecessary. So keep up with it every month. You can utilize some accounting software to help you with that. QuickBooks is an option, Xero, all of those, Wave, FreshBooks, whichever one you pick, as long as it's automated, it'll save you some time. So I always say, go with the saving time method if you can, if you're comfortable with it. And when the time comes, outsource it, because it's not as expensive as you would think. You can get bookkeepers for $25 an hour, and your books are probably not that complex. They can probably do it in 1 hour, and you can free up that time to go do business development or go sell more things in your business. Another question was around separating the finances of the business from personal. And this is really a key element, because you do not want to open the door to liability in your business by transacting your business transactions through your personal finances, or vice versa. So if you haven't already opened a separate bank account for your business, I would highly recommend that. And that if you want to pay yourself from the business, at some point that you're transferring from the business account to your personal, to keep things nice and clean. And also, if you're funding your company from your personal funds, that you're transferring from your personal to your business, so that it's very clear that that is an owner's equity investment you're making in your business that should be properly recorded on your balance sheet for down the road when you decide to take investors or funding, that is clearly allocated in your financials. Taxes. I mean, you guys all know you need to pay taxes, period. And if you're pre-revenue, you don't have to worry about that. If you're in the first year of business and you made some revenue but not enough, and you still at a loss, you won't have to pay taxes on that. If you are in the first year and you did make more and you have some profit, there will be taxes that you're required to pay. You can wait till tax time to do that. You don't have to send in payments ahead. But this is where a good accountant really is worth the money. You got to file your taxes personally anyway. So adding the business to that should be no issue if you're working with an accountant that does business taxes. And there are rules where you can safely, send in a certain amount of estimated taxes while you're starting to make some profit in the business, to make sure you don't get behind. Otherwise, the first year you kind of get a pass, and you can just wait to see what your results are and then make your tax payments, so you won't get penalized. But in the second year of business of making money, the IRS expects you to send in money as you're making it, just like you would on a paycheck when they withdraw some funds automatically. You are now responsible for doing that, because you are the company, both the company entity and also the employee working for the company. So you got to do what the company does to support, all this tax payments and such in your company. Nobody else is going to do it for you. So the sooner you can hire an accountant, the better. That's always what I recommend. And then, like I mentioned, the quarterly taxes, it's something that you're going to have to get used to doing on your own every quarter, or with the help of your accountant tell you how much you should send in once you start making more money. And taxes are complicated because it also combines with your personal. So don't try to just sort it out on your own, because I think you're going to end up saving more money hiring an accountant, unless you literally like to read IRS code and then go for it. I used to do that, and then I outsourced it because I don't have time to deal with it anymore. But, some people enjoy it. So just not what you're good at. And last but not least, the most important thing is like trying to pay yourself should be like your first goal, like besides making revenue. So start by making revenue first. We'll talk more about what that looks like and what that means. But then the next best thing you should do is pay yourself for your time, and make sure that you have that discipline and consistency of doing it. Because I have established businesses, 2-3 years in business, making 7 figures, that come to me to say, I still don't pay myself. And it's just very disappointing to see. And we want more of you to also benefit from what you're creating in your business. The profits of the business should be paying you something that's even better than a job, hopefully, down the road, right? That's why we got into business, to make money. Hopefully, all of you can agree with that. And if not, I recommend that you look into why you got into business. But ideally, we're making money. That should be the goal. And then out of that, we should be building personal wealth through our business profits. And the fallacy everybody tells me about of, well, I reinvest in the business, so I don't pay myself. Yeah, that's crap, and I don't buy it. And I think you need to just prioritize you first, because if you're not seeing a benefit from your business and the effort you're putting in and the nights and days and hours, you'll be resentful and you'll want to quit. And so I don't want you to quit. I want you to have a successful long-term business. And that starts by prioritizing you over paying everyone else. And then just a few recommendations at the bottom of like resources. Profit First is super popular. I think at some point that framework is helpful to understand to get started with, and down the road you'll graduate from that. But I think it's a good first step. It's a simple approach to managing, prioritizing profits in the business. I just don't recommend it longer term. You'll need a much more sophisticated financial system and accounting than what Profit First does. But to get started, it's good. And then Built to Sell as a book of, down the road, you should always plan to exit. Even if you don't decide to exert that option, you should always have a plan to, how do you sell this business? Like, do you build it with, valuation in mind, where one day you can get top dollar for, what you've created, even if you never end up selling it, it just puts you in a good financial position regardless. And if a great offer comes through, why not consider it, right? So, okay. So I think that addresses the QuickBooks, what you need to be tracking. We'll go a little bit more into like, what are the areas that you should be tracking on that? And then that covers bookkeeping, that covers kind of thinking through the basics on what you should be thinking about when you're starting business and good habits, separating business and personal. Literally that simple, but you just got to make sure that you're doing it, because it's really easy to mess things up. And, mistakes happen, so it's okay, but just make sure that consistently you're managing the two as separate entities. Your personal life is not your business, so just keep that in mind. And then I outlined the role of the different professionals that you'll probably need down the road in your both accounting and finance needs of your growing business. It starts with bookkeeping. Again, the accountant, really key, hire as soon as possible. And then down the road, you'll need a CFO with the forecasting and projections piece that we're going to touch on, that I want to make sure you're familiar with that role as well, because it's not talked about often enough, but it is a service that helps you with that investor pitch and projections that you might need some help with if you're not really good at numbers, or you just struggle with that and not really sure where to get started. Obviously, it is something that we can help support as well. So I'm going to stop there for a second. Are there any questions, any additional areas you want me to focus on, or that I didn't cover? I can't see anyone because they're all off video. So make sure to use the chat or audio.
So you did mention like QuickBooks and just finding a platform that saves time. I'm hoping that we would dive more into that, because for me, what would be helpful is for a platform that can automatically record my credit card transactions, or I don't even know if that exists, but
Yeah.
or something where I can just put like take a picture of the receipt and it just automatically goes to that platform. I just haven't been able to find a system for filing the receipts and keeping the receipts. I have a system, but I don't like it because it's just all a paper file monthly one, and I would like to make it all digital, if that makes sense.
Yeah, I can talk about that. Thank you. That's a really good one. Okay, feel free to keep using the chat or reaction. So I'll address that. So we will go into that a little bit more, but QuickBooks does automatically sync with your credit card. You just have to put in your information and then they'll bring in your credit card transactions automatically. And then you can categorize what the expenses are for each line item. That's what we call, record keeping, bookkeeping is categorizing, but there's also a reconciling piece where we're checking the bank account got charged the right amount for the transaction you made. So let's say you spend $10 for office supplies. We want to make sure that that bank transaction also says $10 and not 20, because you got charged twice by mistake. And so the goal of bookkeeping is catching those mistakes so we can make that fix and make sure that everything matches one-to-one for the same amount at the right level. And if your software should help you do that, right? So you can reconcile, we call that reconciling in QuickBooks or in Xero or whichever software you're using. You could also just manually do that, look at your bank records and make sure that everything is accurate. Obviously, if you're using accounting software, you can now pull reports that bring this together into a profit and loss statement format, which is what we're striving to have for our businesses, to manage it and also be able to answer questions about what's happening, where we're spending money, and how we are making money as well, ideally down the road. As far as the receipts go, you can get a QuickBooks app installed on your phone where you can take the receipt and attach it to a transaction. So that's kind of nice because it's all in one place. So you can reference the record and have the picture with the receipt attached to it. Obviously, it comes down to discipline of you actually taking the picture every time you purchase something. So, keep that in mind. The way that I do it, honestly, and I just suggest people like keep something electronic, right? Because receipts get lost, they fade out. And so when I make a transaction for my business, I take just an actual picture and I put it in a Google folder, photos folder, right? That I name business receipts. And then I just keep the record there because at the end of the day, I have my transactions and everything through QuickBooks. And then I just have my receipts in a photo folder that I can show the IRS if I ever get audited for the last 7 years going back, by the way, of records I've kept electronically for the transactions I've had in my business. So that's just how I do it. Like, it doesn't have to be complicated. You can be that simple and still be effective and meet the guidelines that the IRS has required as far as record keeping. So just, another idea to put out there. But all the apps have that. Most of them have that capability, and there's others that are just receipt storage, like bank receipt, and some others that you can search if you would want to use a different system for that. Any other questions? I have a quiet, shy group today. You haven't eaten lunch yet, or you're currently eating lunch, which is why you can't talk. So it's all good. Make sure to drop them. Oh, I see something in the chat, so I'll try to open that up and see. So it's a good question. So if you have all the transactions, you still need to keep the receipt. And yes, the IRS requires you to keep some sort of receipt, because what happens is, let's say you go to Target to buy who knows what, furniture, laptops, groceries, and IRS is like, well, you spent $200 at Target. What did you buy? And they can't tell from the Target transaction in your bank what you bought at Target, right? So you need to be able to provide an evidence on the receipt picture that says, I bought a $500 laptop, and I bought a piece of furniture for my office, and I bought office supplies like paper, and I did not spend the money on personal stuff that I put through the business. So when they audit you, they're looking for that level of specificity. And if you can't provide it, they might say, you owe us money on that $200 charge because we don't know if it's for business or not. So you need to be able to justify. So that's why we want that receipt. It's a good question. Okay. So what to track and how, we have high level categories in our profit and loss statement. For those of you who have looked at one, have one, or are going to put one together for forecasting purposes, you should know that areas and components of each of this. So high level, you have what we call revenue, which is also called income, which is also called sales in your business. So money coming into the business, right? For selling the service or product that you have. And then we have, if you are manufacturing that product, cost of goods sold, or if you're providing a service, there could be service providers that you hire to service your clients or provide that service, which we also consider cost of services, which is within the cost of goods sold type category that we want to track, because we need to know what is left after we pay our providers to service our clients, to provide that service, just like what is left after we purchase materials and inventory for our business to generate those sales. So it's important that you understand what is your gross margin, and that calculation can only happen if you're tracking cost of goods sold or cost of services. And then from there, you want to know, what does it cost me to run the business? What are our operational expenses? What are we paying our assistant and like internet and cell phone bills, right, that we have? And then what is left after all of that is paid? Hopefully a profit and not a loss, but we all start somewhere. And as startups, I think there will be some losses to start, and that's okay. We just want to plan for when do we think we're going to be profitable? When does that change? When do we see that becoming a profit instead of a loss? And having a plan is really key to making that shift over. So I just want to make sure that you're mindful of calculating, what is your percent of revenue for each of those categories so that you can better manage your expenses in the business and then get you to profitability as soon as possible. But it all starts with sales. So we'll talk about revenue generating activities here in a minute. We already talked about categories and reconciling automating transactions for bookkeeping purposes, and then a few options on how to do that. But again, reiterating, don't get behind on bookkeeping because it's expensive and you don't want to spend time doing that. You have better things to do. So, okay, any questions on that high level? I'm moving fairly quickly because I want to get to forecast, but I also want to get to your questions.
There is one, Carla, from Paula. Paula, how do you categorize prototyping?
Yeah, so the way we've categorized in the past is it would still be an expense, but we would do research and development potentially as a category in the profit and loss, because this is like we're testing things. We don't know. We're buying a different kind of toilet for the trailer, so we want to know which one's the best. So we're going to try 3 different ways or 3 different types. So maybe it's the tires, maybe it's the walls, whatever it is that you need to prototype that one piece is most likely research and development until you have the prototype built. And that's just an operating expense of the business. So good question. Okay. Let's continue to make this a conversation. So I'm just going to touch really briefly on financial statements in case you guys are not familiar, but this is important because when we go forecast, we need to know the format that investors want to see our financials put together. And this is just like the standard language that investors speak. So I want you to be very familiar with that. So the income statement or profit and loss statement is the one that we just covered, where it has revenue, cost of goods sold or cost of services, gross margin, operating expense, and net profit. They're going to expect to see your forecast in that format. So just want to make sure that you are familiar with that and can produce financials in that way. It's also the one that I want you to keep an eye on every month so that you know how your business is performing. Statement of cash flows, they're not going to require this except if you're applying for like a bank loan. They would actually require for a 12 to 24 month cash flow projection. This is different from your profit and loss statement because this is how cash timing is happening, when cash is coming in the door and when cash is going out the door for payables. So where people get confused is they think, oh, I made $10,000 in sales, so I have $10,000 in the bank. Wrong. You probably made $10,000 in sales. Maybe you collected $5,000 now, and then you're owed $5,000 for the following month. So you only have $5,000. You also have to pay expenses probably. So out the door went $3,000 to pay expenses. You actually only have 2 and you thought you had 10. This is a huge issue because now you're like, I can't afford to buy XYZ thing because I don't have the money in the bank, right? So this difference in timing is really what gets a lot of people in trouble when it comes to business if they're not managing the cash flow side of the finances. So that's why statement of cash flow is also important. It'll tell you beginning balance of cash flow at the beginning of the period and ending balance of cash at the end of the period. And that's important to monitor because you should not be operating out of your bank account balance. As you know, there's bills coming due, and if you didn't factor that in, you'll be in trouble. So that's what we want to use cash flow statement for. And then obviously your balance sheet, your third financial statement that records your assets and liabilities and owner's equity. So when I was talking about putting money into your business, this is where that would live. It would say, hey, Julie used $20,000 of her own money as owner's investment or equity into funding the business. So we're going to record that in the balance sheet to make sure it's stated properly there. And when we take on investors, we can take that into consideration in the full picture as well. Okay, so I'm not going to dive too much into that, but more into like the forward side of it, which I think is why you guys are here today, now that we've all level set to where we're at. And please feel free to raise your hand, interrupt me, ask questions as we go. So financial planning and setting goals is really where it's at, because this is when we start to be intentional about finances and shifting the direction that we want to see our business go into. So if we want them to be profitable, we need to make a plan to make it profitable. We can't just like hope and pray and wait that things will work out, right? We want to say we need 10 clients paying us this much per month. Now, where do we find our clients? We got to go figure that out. And then go do the marketing activities and do the revenue generating activities like business development to find the clients that are willing to pay us those dollars so we can make those goals a reality. If you want 10 clients, maybe you need to reach to 100 of them before you get the 10 that pay you. So knowing that conversion rate is so important, because that's how you start to get to your goals and know what it takes to get to your goals. But if you're not clear on that, that's the work that we want to start doing with forecasting, to understand how do we get these people to pay us and start generating revenue. So revenue generating activities is like the highest value thing you'll ever do in your business, because someone's got to make money, right? And right now it's probably just you, if you don't have a team yet, that is doing everything. All the 20 things, yes, HR, finance, legal, business development, marketing, like updating your website, doing social media, right? So you're everything to your business. And so we need to prioritize what's going to make us money first. And then we can do all the other things, right? Even if we have to work extra hours later to make up for that. How many customers are you talking to? What are your marketing outreach visibility strategies that you're putting out there? And where possible, outsourcing, because I'll free up your time to do more of the revenue generating business development activities. We'll maybe touch on benefit or ROI, but this is really, around if you're investing dollars in something like a person to help you, make sure you are getting the benefit for that. Or if you're doing marketing and you're investing in marketing, make sure you are getting that return on paying customers at the end of the day for those investments you're making, either of time or money. Okay. I just want you to think about what's the fastest path to money or revenue in your business. So some of you have started doing some sales, some of you are pre-revenue. So what are like the things that you're spending time on right now in your business that are helping you make sales? And if they're not, maybe trying a few different kinds of activities that are leading you to talking to ideal clients or understanding more about the ideal client that will be willing to pay for your service or goods that you're selling. So I need you to think down and write down, strategically think about what are the things I need to do to move the needle to start to make money in my business. And if you don't know what those are, ask a friend, ask another entrepreneur. Like, you'd be surprised how many business owners die to talk about their business, and will tell you all the secrets and everything if you just ask. So like, don't be shy. Go ask them about their business. How did they get started? Where did they find their clients? What are the things that they do to get clients in the door? And get them to share that. How much and how quickly, we need to understand how quickly we can convert people. So it's important that you know what is that timeline to when you start talking to someone to when it converts to a paying customer, right? If you don't understand that timeline, you'll be frustrated because you think that's a day and maybe it takes 3 months. So understanding that's going to be critical. So, oh, when I project out when I forecast my revenue, I know I can't get a client for 3 months. So I'm not going to project day one that I'm going to have, $10,000. You might project that out 3 months from now after you've done all the activities to generate that. Making sure that you can measure, how many clients and like what they're paying you, or like how many products, how many units, and at what price point is really important piece of understanding how you're going to generate revenue in your business. So I want you to start measuring that if you haven't. And then the amount of effort. Sometimes the effort we put in is not directly correlated to the amount of money we get. So if you're selling a product for $10, that might be the same effort as selling something for $10,000. It's something to consider. And make sure that you're getting, a good value for the effort and time you're putting in. Okay, I'm gonna stop there for a second. What other questions do you guys have, just in general? I think we cover a few. We'll go more into the pre-revenue forecasting piece here in a minute. Okay. Forecasting. So forecasting is really an art. There is no set formula or way to go about forecasting. I'll just be honest with you, of my experience and my years doing this, It's an art form. It's about asking a lot of questions, trying to triangulate all the answers and bring together something that makes sense. But at the end of the day, it's just an estimation. We are, setting some numbers out there that seem realistic and achievable, of course. And then we are going to continue to adjust and adapt that forecast as we go through, especially for pre-revenue businesses. You do not have a lot of data to go with, right? So I was just forecasting a new co-working space that a client is opening, and we went with just very small numbers that felt really achievable, right? It was like, we're going to sign up 5 people in the first month in business. We're like, we can find 5 people that can pay us, this rate. And so you can make it achievable. And then we said, okay, how many people do we need to talk to? Or what type of activities do we need to have? Maybe we'll host an event at the co-working space to bring people and start attracting them to wanna come work here. Maybe we'll get with a chamber and do some kind of ribbon cutting, grand opening ceremony to attract people to the location. Maybe we'll do some Facebook posting organically to some people that we know might be interested. Maybe we'll reach directly one-on-one to people to get them, to ask them if they're interested in signing up. So you start to think about what are those things that are going to bring those people and start estimating based on that realistic approach. Again, you don't have a lot of data to go with, so just be very conservative when it comes to your pre-revenue forecasting. And then you can always have a second scenario that's maybe more optimistic. And I find that a lot of business owners tend to be very, very optimistic when it comes to their projections. They're like, we're going to do $1 million in 3 months. And we're just like, how? I want you to answer the how question. Like, I don't care what the number is. You can tell me the number is this or that. I have no judgment of the number. I need to know how you're going to go about getting $1 million to the door in 3 months. If you can convince me that you can achieve that in 3 months, then that means you can't convince an investor too that that's possible. So that's where the storytelling of the financials really come together. It's not the numbers. The investors are going to probably throw away your forecast, to be honest. They want to know how you, first of all, are special, are different, and how you're going to execute a plan that makes sense, logically speaking, to getting to that goal that you're saying is possible. If you can tell that story and convince investors that you're the person and the how really makes sense, they actually will invest money because they know that you can, probably have the potential to achieve that. And even if you fall short, you'll probably still, make some money with the business. So they're not investing in the numbers, they're investing in you and your ability to tell the story of how you're going to be able to achieve that. So yes, putting the forecast is required and you do have to do it. And it has to be convincing. But the how is really where it's at, because that really breaks down your forecast into the areas of, I'm going to invest this much in marketing to help me create leads. I'm going to bring a team of 2 to help support me with these 2 activities, and these are their responsibilities. So it shows the investor that you've thought through your plan, that you've thought through what could possibly go wrong, that you know the people and the needs you have for the business, and how that ties to the revenue goals that you set for the business. If those are disconnected, the investor is going to throw 100 questions your way, and you're not going to be able to survive even the 5 first minutes of that conversation. So you just need to be very prepared and have thought through all the possible scenarios, and make sure you write down your assumptions, because this is a key piece. If you don't have historical data and you're just guessing or guesstimating, you need to know why you thought that was a correct assumption. For example, I'm going to have 10 customers in the first 3 months in business. Why? How? Well, I'm going to talk to 100 people. Out of the 100 people, 10% will convert to being, or 20% will convert to being interested people that I'll follow up with. And after I follow up with them, 10 of them will sign up at this, beta price point, let's say. So now you have told them how you're going to go about achieving those goals. So then doesn't seem impossible. And write down your assumptions, because the you today that forecasted, it's not going to, like 3 months from now, you're not going to remember what you were thinking. And you're going to be like, why did I think I could get 10 customers? I was totally crazy and I only got 1. Okay, like what happened? What changed? I thought I was going to talk to 100 people. Did I talk to 100 people? No, I talked to 50. Okay, well, that's probably part of the problem. And then why did I only land 1 customer? Oh, maybe our price point was off. Or maybe I need to charge more. Maybe I need to charge less. whatever it is, or maybe our value proposition is not clear. And I know you've done a lot of work with that, or you will be doing a lot of work on that. So making sure that you understand why that happened is really key to materializing your forecast. And then I have a spreadsheet, I'm happy to go through like how we would do a forecast, especially for pre-revenue, if that's helpful, on the startup stage versus like the business starting to create and generate some revenue. Because I think that's where people get stuck a lot of, what are my startup costs and how should I account for that? And like, that's going to look awful, like I'm losing money, but investors are not going to want to invest in me. And that's really not, where it should stop. That's just like one piece of the puzzle that we need to be able to talk through and convince investors on why that is going to change.
Carla, would you recommend doing 3 scenario, like base case, worst case, best case in that case? Like in this,
Yeah.
when the assumptions are still being formulated and being adapted?
Yeah, we love working with ranges when it comes to
Okay.
forecasting because we just don't know. There's a lot of uncertainty, right? And so I think there's a realistic case, most likely scenario, and then there's a low and a high end of like things just went worse than we thought, and things went way better than we thought. And I'm going to show that in my forecasting worksheet here in a minute to see how you would showcase that. Blair, go ahead.
Hey, Carla, you may get to this, but so part of my company includes a lot of goods and distribution, and then of course, perhaps even purchasing them wholesale. So sometimes I have to think of like cost of goods and all of those things. Is that something you want to get to as well?
I can dive more into that if you like, if there's a specific question about it. I think what I'm sensing is like those costs ahead of making money and how you're going to plan for that and also fund that. I imagine is maybe what's on your mind.
Yeah, so it's just being able to project. I mean, yes, all of the things. How do I share? Well, I mean, I think the bigger question for me is like with these grant applications and these pitch applications, they are very thorough. So whether it's cost of goods, or I can't remember what the acronym was that starts with the S, they want to know, yes, month over month projections, 5-year forecasting, all of those things. So
Yeah,
I'm just hoping to get a little bit more direction on that as well.
yeah, for sure. I'll touch on the worksheet because I think that might help clarify. So let me just kind of So yeah, and that is exactly right. Like that is an expectation. And I think that's why we're here today, is to talk about that and how do we manage and like how do we create, projections make sense. So I have a financial model example here, and we're gonna get you a copy of this, so you're welcome to use it or just reference it as you need it. The things that I have here are essentially modeling out what a profit and loss statement will look like in this one, and year 0 startup costs. And I think this addresses a lot of you who are pre-revenue that have inventory needs for your product, raw materials and goods that you need to purchase before you can even sell a thing. And this is where it gets really hard, especially for your type of business versus like a service-based business that can just get up and running and like start making money and not have to fund all of these things up front. So there's going to be inventory costs that you're going to have to account for just from the get-go, right? So raw materials, whatever it is that you need to buy. And you're like, how do I tie that to the projection of actually the sales I think I'm going to make? So this is where you need to start with, what do you think your sales are going to be? And to Nidhi's point, we want to have different scenarios where we can look at a low case, a base case, and then just a high case. I don't have a high case here, but there is, you can just duplicate this tab and then essentially model a new scenario for high case. And that is if your startup costs end up being more than you thought. So maybe you need $20,000 for inventory just to get started, right? Where are you going to get that money? Okay, maybe it's a grant application that you're going to file. And they're going to want to see the 5-year projections that we have here. So start with your revenue will be my recommendation. And I want to see revenue by type of product you sell, or at least a high level if you just sell one product. How many units, what is the price point for that item, and then a total for revenue is what I would want to see for your financial model for the revenue section of it. And then you do the math on that. And let's say year one, because year zero, you might not have revenue, but year one, you might have, $50,000 of revenue that you're trying to achieve through selling your inventory. So now you know I need to buy inventory, let's say, and I'm making this up, right? 3 months ahead of sale, because I have to do production, I have to have it delivered, and I have to have the distribution in place to be able to sell the $50,000 of revenue I want to make. Now, have you factored in your distribution costs, your raw materials, your labor costs, your production costs? And that's where you need to kind of walk backwards on what is the timeline. And if you don't know what it is, either you can run a test with maybe just producing one and see how long it takes if you're doing it yourself, or ask for a quote from distributors, or ask for a quote for raw materials that you need to purchase, and start kind of putting those together. So start answering some of those questions that you don't know, or you can just make some assumptions. And then now 3 months before you're gonna order, you probably won't order all $50,000 worth of product either, because maybe it only costs you $20,000 for that $50,000 in sales. So you want to order maybe $2,000 to $3,000 or whatever it is that you can afford of product to sell, and they'll give you, if it's 70% margin, somewhere like $5,000 to $7,000 in sales. So you also need to understand what are your costs, understand what is your margin on that product. So it costs me $2 to make it, I can sell it for $5. You need to know what that formula is and what those numbers are, so that you can start formulating how much inventory does it take to create $50,000 in sales. So you're starting to put those pieces together by bringing each piece of information and start to do the calculations on timeline on how long. By the way, this is a year forecast, but we normally are looking at this monthly and then at the aggregate year, because we need to know at what point in the year do we need to start purchasing things, what month, to be able to fulfill sales at a certain point in time in the future, like in this case, 3 months out. So we need to be able to see it by month and then bring it to the high level aggregate view of the year, because that's what investors are going to want to see. But you wouldn't ideally have the detailed month by month view of expenses and raw materials and purchase and inventory and all those costs that go along with that. I know that was a lot, so I'm going to stop there for a second to make sure you all digest it. And if not, you're going to have to rewatch this a few times to go over that tying of the concepts, because it is a lot of information.
That was helpful. Thank you.
Yeah. And that's how we start to think about putting that forecast together, Blair, for the needs of the company, right? On like inventory. And then you will always have something called working capital, meaning there's an allocation of money that will always be utilized to purchase inventory to be able to generate sales in the future. So you can dip into those funds because you want to have them available, so that in case, because you will always have to buy inventory ahead of selling it, unlike other business models where that is not required. So knowing what that should be, if your order is always $2,000 or $3,000, we want to make sure we always have that available in cash to be able to purchase. Or if you can qualify for a credit card or a line of credit, harder to do earlier on, and they will require a personal guarantee most likely, but it is something you could start to think about leveraging other people's money or other funds instead of yours. If not, you can bootstrap and fund yourself where you can.
So question, so
Yeah.
you don't have any historical data, right? So
Yeah.
pre-seed, haven't sold a thing. A lot of the money I'm going to be fundraising for is for production, right? Because production costs are what's really stopping us from moving forward.
Yeah.
How are you supposed to forecast how much you're going to sell year 1, year 2, year 3, when you have no historical data to base that on?
Yeah. And that's
Just
why I
making it up?
mentioned it was like hard.
Yeah.
Yes. Literally the answer is you're making shit up. Okay.
Okay,
Sorry,
okay.
excuse my language, but
No, you're fine.
you are just making it up. Like you're saying,
Okay.
I believe that I have the ability to, in year 1, produce this much in sales. And what's helpful, Parisas, if you have made maybe a few sales, that could, help you kind of get. But if you haven't made a single sale,
Yeah.
you have to tell the story, right? It's like, I'm going to sell $50,000 in year one, and here's how I think I'm going to be able to do that. But what's stopping us from that growth, by the way, year 2, 3, and 4, it's like 200, 500, $1 million, right? Is we can fund production costs. So the money you give me today to invest is to produce this many units at this timeline, and we're going to market with a strategy to partner with this retail store or whatever it is, right? That will help us move the units. Because what investors want to know is, okay, I give you the money to produce, you can produce in 3 months, let's say, but then is there demand for your product? So if you can show them that there's some demand waiting, like letter of intent or a purchase order even of, let's say, 100 units from my retailer that's ready to put your product on the shelf, and you just can't fund the production, that shows them that there's an interest for your product. Now, if you don't have those things, doesn't mean you can't go in front of investor and fundraise, but you need to be able to tell them how you're going to get this product sold and where, to make it more believable. So you're not just putting numbers up on the screen that mean nothing. You have to have your story and your thinking through how you're going to move those units and what does it look like? Because they're going to have questions. They're going to be like, well, what retailer? How much are they taking for distribution? Like, what are they charging you? What are the pass-through costs? Like, they're going to be like, do you have to pay them something to put this on the shelf? What wholesale price are you giving them? Like, they're going to start. And if you haven't thought through those things, what I think stops investors from investing is if you don't have answers to the questions, because that means you haven't thought through that. And you're fumbling and you're just kind of making it up, and they can tell, right? They've been through enough pitches to know who's making it up versus who have sat down and thought through those answers before. And it's like, well, we are not going wholesale, or yes, we are. And here's our price point, and here's the units, and here's how many retailers we need. And if you're asking for investors to partner with you and bring those relationships to the table, that can be an aspect of it as well. Well, the reason we're here fundraising in front of you today is because you have the connections to the retailers, and we need introductions, but we will have product ready the moment we have production up and running in 3 months for you to make those introductions to get letters of intent and purchase orders in place. You can be very honest about it too. Like some investors will love that. Some investors will be like, nope, don't want to be a partner. Don't want to help you. I just want to give you money. And that's okay too. Like, and we will take your money too. If that's all you want to do.
And I think I'm making it easy for myself by just doing direct to consumer online only. So it takes out the whole, wholesale working with a retailer and all of that. But I think that's why a lot of the money too will need to go towards marketing and making sure people are very aware of this product.
Yeah, because investors are going to be like, great, I found production. And then what? The product sits on the shelf and never gets out of your warehouse because you don't know how to market your product, because you didn't put a marketing allocation in your plan. You're like, oh man, I missed that one, right? So you kind of have to think through those pieces. And then as an investor, I'll tell you, you tell me direct to consumer, I'm like, great. So how are you going to scale? Like, it's going to take you longer because you don't do wholesale. Year 2 or 3, I'm thinking ahead. I'm thinking year 5, I'm going to get my return on investment on my money. And if I don't see a path, I'm not going to give you money.
Yeah.
So you got to think through that too, right? It's like, yes, you're working in the now and there's a lot you don't know, but they're also thinking, I need my money back with dividends. So what's my ROI and when am I getting it? It's a year 3, it's a year 4, it's a year 5. That's fine, but I just need to know. So if you haven't thought through like your full 5-year plan, they're testing for that too.
Gotcha. Okay. Thank you.
Yeah. Great questions. Great conversation. Anyone else want to tackle theirs specifically?
How would you, if you do want to start with working with a distributor and they also, they like the distributor I've been talking to is Canadian. And so like, I also have been doing just like online e-commerce, but it's really difficult to do anything international because it's like $15 shipping just for like the smallest box.
Yes.
So like there's a Canadian distributor that's I've been chatting with, and they also scale up, but they have like people out in the field that are out there selling. And then there's like, they need to know that you're able to like scale up super quick if the thing takes
Yeah.
off
Mhm.
with their, if everyone wants it, but like there's a chance no one wants it, and so it's hard for me to know, like, your profit margin is going to go down when you're including these middlemen, but the numbers are going to go up. And so when you're trying to weigh those options, does it just require more sophisticated forecasting software, or is it like, can I just look at, okay, profit margin of, 30% compared to 60%, but if I double the number that I'm selling, then I'm coming out even, kind of thing.
Yes. Yes, you got it. So that's what we call scenario planning. And that's why Nidhi was asking about the low, base, and high, because it's exactly what we would do is maybe the low scenario is not the units. The low scenario is like a lower margin for you, but a higher
Mhm.
quantity, or maybe that's your high because the quantity makes up for the profit margin hit you're taking, right? And
Mhm.
that's what we call economy of scales, because if you're selling 1 million units versus 100,000, big difference, because we don't care so much about the margin at that point, because we're going to make it up on the units we're selling at a lower margin than if we had a higher margin with less units, right? So you kind of have to
Exactly.
do the math to make sure it actually maths well for you. But compare the two, right? Higher margin, less units, lower margin, bigger units. And then touching on your ability to scale, that's a key one, because what happens is investors are like, great, I'm going to get you started. It's all going to start moving and it's all going to fall apart because you don't know how to scale a company. And so you
Mhm.
need to be prepared with a plan. You say, hey, once we hit 10,000 units, I'm going to go get a line of credit with a sales I've made and make sure that I have the working capital to continue to fund this to the next stage. So you need to think ahead a few steps, even though you're just like literally starting and you're like, I don't know, like what's going to happen. You need to think, okay, if this thing's exploding, what am I doing? Am I mortgaging my house? Am I selling a car to fund this? Like, what needs to
Mhm.
happen, right? And you need to be prepared to be able to answer those questions, because that lets them know that you're serious and that when it does happen, I need to go get the line of credit. I need to go get the loan. I need to go get investor number 2 to come in and put in money, or go back to investor 1 and say, you need to put in $200,000 more because now we're like scaling so fast. I need more cash. And most likely investors, when they start to see there's momentum, they'll be like, yes, take my money because I want to get a better
Mhm.
return. So, but you need to think through that too. And also decide how much of your company do you want to give away. I think too fast, too soon, founders find themselves giving away too much percentage of
Mhm.
equity, and then they regret it down the road. They don't regret it in year 2, 3, 5. They regret it on year 10 when they go sell for millions, and then they're the ones that are the least pay out of everyone that put money in, and they were the
Mhm.
ones that did all the work, right? So I've talked to people who have successfully exit their funded ventures, and the one thing they tell me is always, I regret giving too much equity too soon because I bring more partners, I get diluted more and more and more, and there's just less of the pie for me to keep at the end of the day. So I'm more concerned about that for you as a founder, to try to protect as much equity as you possibly can while still getting the right level of partnership and investment in your business.
Mhm. Thank you.
Yeah, and then just spark the thought too, what you're going to do with the money when they give it to you. It's one thing to have a plan, but you need to be able to execute on moving those funds and allocating them to the right place. So investors are also testing for, do you know, if I give you $100,000 today, what's going to happen tomorrow, in 2 months, in a year from now? Because I need you to leverage my cash to make us more money together, not to maybe pay yourself or do something else that you didn't tell them you were going to do. Like, I'm behind on bills, so I'm just going to catch everyone up, and then I'm not going to scale because I used the money the wrong way. So whatever
Uh-huh.
plan you have for the money and the funds and how you're going to deploy them, you need to follow that, because that's what investors are giving you the money for. I mean, you can do whatever you want, but I'm just saying the whole point of them investing is that they thought you were going to spend, 50,000 on marketing and 50,000 on production. So if you're not, and you do something else and you don't scale, they're probably not going to give you more money.
Got it.
So,
Thank
yeah.
you.
Carla, and I think that's why your previous slide where you were mentioning what gets you to revenue, those are you have to think through, like, what is getting you to revenue, which ones to prioritize, etc.
Yeah, exactly. And I see a lot of business owners just not prioritizing revenue generating activities. And then I'm like, they're like, the pretty website, the logo, the business cards. I'm like, none of that matters. You can sell on a piece of paper, you write down what you're offering. You can show a picture of your product on your phone. And if someone says yes, and you can swipe a credit card, that's what matters. Like, that's really what moves the needle in business. And I think we're just like being sold to too many solutions and products and courses and coaches and things that really do not make you money, make them money. So I just want to guard you as a business owner to be very critical about where you're spending your dollars and also what you're spending your time, because your time is money. And if you're not spending your time in selling and generating revenue in your business, no one else will. It's you, right? The ball, or was it the buck, stops with you. So yes, everybody learns the hard way for sure. Trust me. It's getting to the first 100,000 is no joke. And then after that, it's a little bit easier, not easy, but easier, because you figure out a few things. But if you haven't, done the first $1,000 of sales, $10,000 of sales, that's where you need to focus your attention. Okay, I don't want to run up against the clock, but I'm here for questions. Go ahead, Paula.
Okay, we were prototyping during 1 year. Our goal was to start selling this week on July 14th. So we went, and our plan was sell through dealers because we think is the way that we can scale. So we went to a trade show last weekend, and we made sales to direct consumers.
Nice.
Was our first sales. So we are in the point that we were talking with dealers, and they are super interested in the product, and we made direct consumer sales. So we are feeling like we can become their competitors with the dealers. And yeah, but this opportunity opened to us, and of course we are super happy. But yeah, we have some conversations in place, and we are like, oh, what we are going to do.
Yeah,
So, yeah,
I mean, that's great. You need to fund your orders with product that you have already sold, right? You probably got, in your line of business, I imagine you get a deposit and then you get upon completion or around milestone billing as you develop the product, or maybe you get paid in full upfront. I'm not sure your model for billing for that trailer. But if you have interest and you have people giving you deposits to hold their trailer or start working on it, you need to fund that first, right? Have the labor, materials, all of that available to fill those orders. And then you need to be able to deliver the order to the customer. So like, you're probably working through that. What does that cost? How are you going to afford to buy materials if you are not self-funding? If there's an investor that's going to come in and fund that for you. So imagine you're kind of working through that right now in real time.
Yeah, we already delivered the first one yesterday because we have in stock 4 units ready to deliver. So yeah, we are totally ready to deliver the product. So, but yeah, the point is we are feeling that we are competing with the dealers. So yeah, it's like less margin, more volume, or more margin, less volume. It's like, yeah.
Yeah.
It totally changed all our plans.
I don't think it's like an all or nothing either, Paula. You could do a little bit of both too. I think sometimes we're too black or white when it comes to businesses. Maybe you have so many units that go through dealer and other units that don't go through the dealer, direct to consumer, and you can see both and then compare to see what's a better business model for you. And you will cap at scaling, so maybe you do need to use the dealers longer term to scale, right? But you can still keep your direct to consumer line as well as your wholesale or through dealer line of revenue and create two ways of selling to customers. So you are diversifying your revenue streams, which is a great thing to have in business. We always recommend to have several ways that people generate revenue so that if one goes away, you're not shutting down tomorrow because you only had one way to make money. So
okay, yeah, it is a good advice.
Yeah. And I think Bree asked on 501c3 nonprofit status, does that change the way we work with our financial projections and planning? No, it doesn't. It just, you have a lot more requirement on reporting compliance you need to do for 501c3s. And there's certain ways that funds are restricted on how they can be utilized. So you just have to be careful and mindful of that and make sure you have good reporting to be compliant with reporting requirements. So, but as far as projecting costs and such, you could still handle it the same way. And then you might have an extra layer of restricted funds or unrestricted funds that you can manage to as well. So there might be actually a little bit more just complexity on tracking. And if you want to see that in the projections, then you'll need to do that view of the data as well. I was just working with a very established nonprofit in the millions, and the way we did it is we had by grant reporting, we had by month reporting, P&L, and then we had by restricted, unrestricted funds class reporting. So, and then we had a consolidated overall view, obviously, too, of everything. So it's just something you need to keep in mind. And there's obviously software that can help you with that as well. But it's definitely a little bit more complex, but the way you forecast doesn't change. Hope that helps.
Oh, yeah, thank you. Thank you so much.
Okay. Any other questions? Yeah, you're welcome. Those are good questions, you guys.
Yeah.
We're really getting into it. I love it because this is what this was about.
Okay, I have another question then.
Yeah, go for it.
Like you say that you'd like do consulting work, like is there, for one, it's super hard to find a CPA. I don't know if people are aware that there's like an extreme shortage of CPAs out there. And so most of the CPAs that do business stuff that I've talked to don't want to deal with startups and stuff. So just FYI on that. But I'm wondering, like, sometimes you just need some advice, you just need someone to kind of look at your business and stuff. And so are there people, and maybe it's you or maybe it's others, but like, are there people that will be like, yeah, for $250, I'll meet with you for an hour and I'll look at your business, or, and give you some feedback or work with you. Like I hired a projections person off of Upwork, and they created like a whole model for me, and they'll work with me in answering questions. But it's like the model is so confusing to me. It's like built out to like, capture so many different things that it almost makes it unusable.
And they only are the only ones that know how to edit, and then you're just like, I can't, like.
Right. And they like try to make it so simple, but if you're not a financial person, then it's like not simple at all.
Yeah, I feel for you, Kim. I know exactly what you're talking about. And I'm not gonna lie, as a financial professional, I get it, because when we build models, like, trust me, my models can get really complex. And then the client feels like I'm the only one that can touch it. And it's like, no, you can. And I show them and they're still like, what? I have no idea, right?
Exactly.
So yeah, so to answer your first question, yes, there are people out there that can give you financial advice and like just give you like overall business expert kind of perspective, right? Of like, hey, I just need to run this by someone who knows a thing or two about business. So I would look for people who have maybe like an MBA, right? They've gone through school to know. But honestly, sometimes even other business owners that maybe you're friends with, or like that you can reach out to, that can be, hey, can I just, do you have an hour to spare? And then if you want to do paid, obviously we do consulting like that too, and other people do consulting like that as well, business coaches. Just be careful who you get advice from, because I think there's a lot of people out there without the experience, expertise, or letters to really merit listening to their advice. So just be careful with that. And I know you probably know that already. And to address the shortage on CPAs, yes, there's a shortage. Anyone that that likes numbers, you should encourage them to be a CPA or accountant. It's also a lot of work and not a lot of pay. So there's that. And good CPAs are hard to come by. So like,
yes.
and then you'll need different CPAs at different stages in your business life, I think also. So think about maybe you start with some CPA that maybe is just out of school, can do your taxes, and then you want more like experienced CPA as your business grows that knows tax strategy and planning and can
Mhm.
really kind of work with you on tax savings type things, right? So yes, I will agree. It is hard to find a good CPA. I have a network. I'm happy to refer you to someone if that's something that you guys need. I'm happy to be a resource that way. I don't have a lot, but the few I do are really good. So, and then
Mhm.
the third thing was just like overall business advice, right? Yes, you can run your model through people. If you have someone model something out for you, a financial analyst, have them create a video for training, have them walk you through the model, and then say, where's the area I can just adjust a few things that make the whole model work for me? Because that's how we build it. We build an inputs
Mhm.
tab or something, and then we say, if you change the units from 10 to 100, everything else gets updated, right? And you just need to
Mhm.
know what's that box, cell A1 through D5 that I'm allowed to touch so I don't break the rest, right? And then
Mhm.
have them highlight it for you, put instructions together or something, because that's how models get built. And then the complexity behind the model, you don't need to know, right? Maybe you need to understand your margins to make sure that they're right in case you need to change them. But yeah, and then otherwise just keep working with that person to update the model, which is not very cost friendly, but
Mhm.
and honestly, experienced people like myself can go into a model and know exactly how it was built and what formulas and what's setting what. It just takes us a minute to, get up to speed. But so you're
Mhm.
not like stuck with that one person either. I've jumped on other people's complex financial models and figured it out. Again, it just takes me a minute, to go through because I can do that too. So look
Mhm.
for like experienced financial professionals that have been FP&As, financial planning and analysis analysts, or financial analyst that has that experience and can work with models in Excel, that knows a thing or two that maybe can even explain to you better.
Sure.
So that would be my recommendation for resources that you can access.
Okay. And fractional CFO, is that something that is like worthwhile, do you think?
Well, you're asking a fractional CFO if I am
Oh,
worth it.
okay.
So yes. No, good question. So what I'll say is it's merited when when the finances of the business are complex enough. And that starts
Mhm.
to be, in like halfway through $1 million, like $500,000, $1 million, because there is a need for proactive planning. Now, everybody could use fractional CFO services as a proactive
Mhm.
planning approach. Obviously, it's whether or not you can actually afford to access it. And so, a few ways that we work with clients that's accessible is project based, so we can do a one-time fee and like not have to do recurring charges, right? And there's a lot of
Mhm.
people that offer that too. So and then there's also more junior CFOs you can hire as well. They might not have all the experience, but at least can give you some financial,
Mhm.
guidance and direction to start. And then obviously over time, you might want to upgrade your CFO. But yeah, fractional CFO is a complementary role to the bookkeeping and accounting. That's why I kind of put that blog post on the resource
Mhm.
page at the beginning to help you understand what a fractional CFO does, when you might need one. But it really comes down to the complexity of the finances and also a partner that can partner with you to solve problems and help you achieve the goals financially of the company. So that's really what the fractional CFO role is.
And do they usually work by the hour, or is that like a retainer and then they, or just you can ask them questions as they arise?
Good question. So yes, there's hourly fractional CFOs, there's project-based fee CFOs, and then there's retainer ongoing services that CFOs provide. Not every fractional CFO is the same, so you kind of have to see who works in that way, essentially. But
Mhm.
yeah,
Okay.
that's essentially the offers. Good questions. Okay, Nidhi, I think we're like a
Yeah.
minute. We just go rolling, and so there that happens.
So Carla, that was very informative. I'm talking to you for the first time. I learned quite a bit. I
Thank you.
hope the entrepreneurs here took some of the key points that you were mentioning. And Carla, just in case if our entrepreneurs want to reach out to you after this meeting, if you want to, here it is.
Look, we can prepare, always are. But yeah, feel free to reach out. to our team, and we're happy to set up time to talk to you about your financial needs and support. If we can be a resource, if we can connect you with a CPA, obviously we network with other CFOs too. So if there's a specific industry you want a CFO in, we're happy to connect you and refer you to the right person. We just want more business owners to have long-lasting, profitable businesses that are paying them a reasonable salary. And we're just very passionate about that. And we do a lot of free education. So feel free to follow us, sign up for our monthly newsletter if you want some free resources. We love to give it all away because we just want more businesses to thrive.
Thank you, Carla.
Of
And
course.
thank you everyone for joining. I hope to see you more in upcoming workshops and as you're developing your your business plan. So thank you, everyone.
Thank you.
Thank you, Carla.
Thanks, everyone.
Appreciate it.
Thank you so
Thanks.
much.